Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Golden Ocean Group Limited, ticker symbol GOGL. We're looking at Golden Ocean Group today because this was one of the most popular companies we looked at last year. Their stock price is down quite a bit from when we had initially looked at the business in summer of 2022, but they're still up 8% over the past year. Right now, they're trading for $9.22 per share, and they're also paying out a 25.5% dividend yield, which is one of the highest dividend yields of any business in the overall market. Over the last 5 years, Golden Ocean Group is compounding at a rate of 2.5% annually. However, going back to when they were publicly listed nearly 8 years ago, the business's stock price is down by more than 60%, meaning that they are down at a rate of 11.5% annually. Keep in mind, though, that their dividend payouts, especially their high dividend yield recently, would not be included by this compounded annual return, so those dividend payouts would be in addition to this return. Right now, Golden Ocean Group is trading about $2 above their 52-week low. They're down about $7 from their 52-week high. A little under 3% of their shares outstanding are currently sold short, and they have about a $1.8 billion market cap. For more background about the business, Golden Ocean Group Limited is a Bermuda-based dry bulk shipping company. Its business involves the transportation of dry bulk cargoes, including ores, coal, grains, and fertilizers, through its fleet of owned and chartered vessels, bareboat vessels, commercial management vessels, and new buildings are chartered out on fixed-rate time charters and index-linked time charter contracts. As of March of 2022, the firm owned a fleet of 81 dry bulk vessels. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Golden Ocean Group based off of their business fundamentals. This analysis is still an evolving process, and it's an opportunity to learn in public. This is one of the first times we're making an updated video looking at a business's fundamentals as they've continued to progress over the past year or so. So our analysis is going to continue to improve and get better over time. With that said, let's get right into Golden Ocean Group. So starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. And there are 2 key reasons for this. The first is that the average publicly listed business earns about a 7% return on capital. And the second is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns. And these business returns are going to be captured here by return on capital. So over this time, Golden Ocean Group earned very small returns on capital pretty much leading into 2021. Post the COVID-19 pandemic lockdowns, the global shipping industry has more or less been in a boom period. And so Golden Ocean Group had 15% returns on capital in 2021. Over their last 12 months, they've had about 16% returns on capital. However, averaged out over these past 5 fiscal years, Golden Ocean Group is only earning about a 5.5% return on capital. And so that's going to be coming in well short of that 14% benchmark we're looking for, and also below the returns that a typical business would be providing us. So this is an X to start things off on metric number 1. Even though they have seen a boom in their business recently, it's not surprising here that we're seeing this fluctuation in return on capital, as dry bulk shipping is a commodity business and it's going to be prone to these boom and bust cycles overall. Then next up for metric number 2, here we're taking a high-level overview of the growth of the business. So we're looking for revenue, net income, and free cash flow growth over the last 5 years, and this metric is all or nothing in nature. Either all 3 of these are going to be up for this to be a check, or if even one of these is down, this entire metric will be an X. So over this period, Golden Ocean Group has seen their revenues nearly triple. Their net income has gone from being just very slightly negative in 2017 to they produced more than $500 million worth of earnings in 2021. And over this period, their free cash flows have also swung from being negative to they have been positive over their last 4 fiscal years and over their last 12 months as well. So all 3 of these are up. This is strong growth across the board here for Golden Ocean Group. So this is our first check of the day coming in on metric number 2. It's especially great to see that their free cash flows are up and that they've been pretty steady over their past several years, as free cash flows are really the lifeblood of any business, and a business can use its free cash flows to reinvest back into the business, pay down debt, make acquisitions, buy back shares, or pay dividends. So ultimately, a business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is what that business is going to be worth. So again, great to see strong free cash flow growth and great to see growth across the board here for Golden Ocean Group. Next up for metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at Golden Ocean Group on a per share basis. So we're looking for earnings per share growth over the last 5 years. So in our previous metric, we learned that their earnings have gone from being negative in 2017 to now they're positive currently. And they were positive in 2021 as well. However, earnings are just the numerator in this earnings per share equation. We also want to take a look at the denominator, their shares outstanding, and see what Golden Ocean Group has done there. Unfortunately for existing shareholders in the business, Golden Ocean Group has diluted existing shareholders by about 61% over the past 5 years alone, with much of this dilution coming from 2020 onwards. So this potentially isn't great because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. And so when a business issues new shares and dilutes existing shareholders, they're decreasing your ownership percentage in the business, which is ultimately going to decrease the percentage of the business's profits that you're entitled to. Amazingly, even with this 61% shareholder dilution though, their earnings have grown at a rate that their earnings per share are actually up over this period. So they had negative earnings per share in 2017. However, over their last 12 months, they've actually earned $2.96 worth of earnings per share. So even with this shareholder dilution, which you would likely want to dig in and learn more about the business to understand in more depth, this is another check here on metric number 3, as we're seeing that the business has grown their earnings per share over the last 5 years. Next up, metric number 4 is going to be very similar. Here we're looking for free cash flow per share growth over the last 5 years. So again, similar to their earnings, their free cash flows have gone from being negative to now they are positive. Over their last 12 months, they've earned about $2.57 worth of free cash flow for each share that they had outstanding. So even in spite of their shareholder dilution again, they've managed to grow this metric as well. This is another check here on metric number 4, and so far through our first 4 metrics, we have 3 checks and only 1 X for Golden Ocean Group. Next up, for metric number 5, here we're evaluating how the business is utilizing debt. So we don't want to be investing in overly levered businesses because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor outcomes. So we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow that they produced over the past 5 years. Golden Ocean Group ended 2021 with about $1.2 billion worth of net debt. Currently, they have about $1.1 billion worth of net debt. However, over these last 5 fiscal years, they've only produced a net amount of about $300 million worth of free cash flow. That's just slightly more than a fourth of their net debt position right now, meaning that on an average basis of their free cash flows, this is an X here on metric number 5. Worth being aware of, however, is that over their last 12 months, Golden Ocean Group has produced $517 million worth of free cash flow. If their free cash flows going forward are going to be anything like their free cash flows over their last 12 months, then it looks like the business would be able to support this debt load. And extrapolating their current free cash flows out into the future, they'd be able to pay off all of this debt in just over 2 years. Even though this is an X here on metric number 5, it does look like the business has the potential to be able to support these debt loads and that this would be a healthy debt position for the business. Again, this is something that you'd likely just want to dig in and learn more about to understand if this is going to be more sustainable going forward for the company. Then our 6th and final metric, the big metric of them all, we want their average free cash flow to their enterprise value to give us a yield that's above 5%. If this is the case, this will potentially give us a slight risk premium to the yield of the 10-year treasury, and potentially give us another reason to be interested in Golden Ocean Group. So we're using their total enterprise value because it takes into account both their market cap and their net debt position, and it's going to give us a perspective of the economic reality of the business that's going to be more similar to as if Golden Ocean Group were a private company. Right now, Golden Ocean Group has a total enterprise value of about $3 billion. We learned that over their last 5 years, they've only produced about $300 million worth of free cash flow, meaning that in an average year, they're only producing about $60 million worth of free cash flow. So when we divide their $60 million of their average free cash flow by their $3 billion total enterprise value, that only gives us about a 2% average free cash flow to enterprise value yield based off these historical free cash flows. So this is an X on metric number 6, as this is coming in under the rate of both the 10-year treasury yield and well below that 5% benchmark we're ideally looking for. Again, though, it's worth being aware that their free cash flows over their last 12 months are up pretty dramatically from where they've been at historically. So to get a current free cash flow to enterprise value yield for the business, when we divide their $517 million of their last 12 months of free cash flow by their $3 billion total enterprise value, that gives us about a 17% current free cash flow to enterprise value yield for the business. So that would be well above that potential 5% risk premium. So because their average free cash flow compared to their current free cash flow yields are on pretty extreme sides of this 5% mark we're ideally looking for, it's likely that the economic reality for the business lies somewhere in between these two. So again, a major part of understanding Golden Ocean Group is going to be trying to dig in and understand whether their recent good times are going to be able to continue going forward for the business, as that's really going to determine what their free cash flows are likely to be 5, 10, or 15 years out into the future, compared to the valuation of the company currently. Then as a bonus, here we're taking a look at Golden Ocean Group's dividend profile. So again, Golden Ocean Group is paying out a 25.5% dividend yield right now, which is extremely high compared to almost every other business in the market. However, it's really easy for people to make mistakes by blindly chasing dividend yields, so instead, it's important to stop and look at the underlying fundamentals of a business and to determine whether that business is going to be able to support their dividends with either their earnings or their free cash flows, depending on the type of business. For Golden Ocean Group, we want their dividends to be well supported by their free cash flows. Of these previous 5 fiscal years, Golden Ocean Group has only supported their dividend payouts in one of these years, and that came in 2019. They did not pay out dividends in 2020. And in 2021, they paid out a large amount of dividends per share relative to the cash flows that they brought in. However, based off their last 12 months of free cash flow, they brought in $2.57 worth of free cash flow over that period, and they paid out $2.35 worth of dividends. So they have been able to support their recent dividend payouts. But again, they've had a pretty up and down track record that has not looked like it's been sustainable over this period in terms of supporting these dividend payouts in previous years. And it would be potentially concerning in terms of capital allocation as to why they were paying out such extensive dividends in 2021, especially as the business was issuing new shares and their dividends were not supported by their cash flows. So that's something, again, you would just want to dig in and learn more about the business in more depth to understand. It is a good sign for the business, though, that they are supporting this very high dividend yield with their current free cash flows. However, to determine whether or not this is going to be potentially sustainable going forward into the future, again, you're really just going to have to understand where this business is at in terms of its role in the global shipping boom and bust cycle in this commoditized industry. Everything we've discussed so far is important, but there's something missing that, in my opinion, is the main reason to analyze Golden Ocean Group, which takes us on to using a discounted cash flow model to come to a potential fair value for the business. So a discounted cash flow model is just like any other model in any other discipline. Its outputs are going to be sensitive to its inputs. So here we're starting with an average of their free cash flows since the COVID-19 pandemic. Then we're using historical growth assumptions for how the business has managed to grow their free cash flows dating back to since they've been a public business. So assuming a growth stage over the next 10 years where their average free cash flows decline at a rate of 7% annually, then assuming a terminal stage for the 10 years out after that, where these free cash flows decline at a rate of 10% annually. If we were seeking a potential 10% rate of return for the business today, then it looks like a fair value for Golden Ocean Group is right around $6.83 per share. Please keep in mind a number of caveats here. One is that this return would be including their dividend yield. So even though you'd be managing to get this return, it looks like their stock price would continue to decline pretty dramatically. Even more important is because this business operates in a highly cyclical, commoditized industry, there are a number of reasons why this valuation might not be potentially accurate for the business going forward, especially because the business does not have a long track record as a public company. So it's up to you to do your own homework here to determine whether or not these historical growth assumptions are going to be potentially accurate or applicable going forward to give us a baseline projected estimate for Golden Ocean Group. It's worth being mindful that this analysis is not financial advice. It's not a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. Using these same historical growth assumptions from today's valuations, it looks like you could reasonably expect about a 4% rate of return from Golden Ocean Group. Keep in mind again that this would be including their dividend yield, so their stock price would be continuing to decline by quite a bit. And the difference between their dividend yield and their stock price declines would make up this discount rate going forward. So in summary, Golden Ocean Group checks the box on 3 out of 6 of our metrics. They're earning average returns on capital that are coming in below that of a typical business, right around 5.5%. Although similar to a lot of the other metrics we've looked at, their last 12 months worth of numbers are significantly above where they've historically been at. So over the last 5 years, their revenues have tripled and both their earnings and their free cash flows have swung from being negative to now they're pretty positive. Even though they've diluted existing shareholders by 61% over this time frame, their per share metrics are up because of this massive growth in their business. Then it doesn't look like their debt loads are historically supported by their abilities to produce free cash flows, but it does look like based off of their current free cash flows that debt would be very manageable for the business. So again, a lot of your focus into researching Golden Ocean Group in more depth is likely going to be centered around the sustainability of their increased cash flows going forward. That was also the case when we were looking at their abilities to produce free cash flows and comparing that to their enterprise value yield on both a current and an average basis, where on an average basis, it looked like it was coming in below that 5% risk premium benchmark we're looking for, but on a current basis, it was well above that benchmark. Then looking at their dividend profile, Golden Ocean Group is paying out a 25.5% dividend yield, one of the highest in the overall market. And it looks like based off of their current free cash flows that they're able to support this dividend payout, but they've only supported that in 2 of the previous 5 years, 1 year being in 2020 when they did not pay out dividends at all. This dividend was again not supported by their free cash flows in 2021, and at the same time the business was issuing a lot of shares. So you would want to read through the company's filings and understand what management's approach to capital allocation is like to be able to make sense of some of these capital allocation moves and understand if those are creating or destroying value for existing shareholders in the business. Then finally, performing a discounted cash flow analysis of Golden Ocean Group. If you've done the work and you believe those historical growth assumptions for the business, then it looks like if you were seeking a potential 10% rate of return from the business, that a fair value for the company would be around $6 per share, and that from today's valuations, you could only expect about a 4% rate of return going forward. So again, both of those would be including their dividend yield in them. So it makes it a little complicated. But if those assumptions serve as a baseline for the future, then it looks like their stock price would continue to decline, and that shareholder return would be made up primarily of the difference between their dividend yield, which is at 25% right now, and their stock price declines. So again, there are a number of reasons why that might not be potentially accurate for the business going forward. So it's worth reiterating that this type of analysis is not financial advice. It's not a buy or sell recommendation of any security. And before considering any potential investment, please consult with your financial advisor. This analysis instead serves as a beginning and holistic understanding to help you determine whether it's worth your time and energy to dig in and learn more about Golden Ocean Group. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community-written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $99. That's only 27 cents per day through my referral link down in the description below. Normally, premium is $239, but they are currently running a general offer for $119. But if you use my link, it's only $99. So check it out if you're interested. So as a value investor, you're ultimately trying to conduct this research as if you're going to own 100% of a business, and you can truly understand the ins and outs of that company and understand its overall essence to know what matters and what doesn't matter for the business going forward. So through this deeper research, you'll learn more about the qualitative and the quantitative aspects of Golden Ocean Group, and you'll likely be able to determine for yourself what a reasonably appropriate intrinsic value for the company will be. So with that said, that's it for today's fundamental stock analysis of Golden Ocean Group Limited, ticker symbol GOGL. Again, we're looking at the business today as an update in 2023 to one of the most popular businesses that we analyzed last year, taking the company through our updated analysis framework and looking at how the business and its stock has performed over the last 6 months since our most recent analysis. So if you enjoyed today's video or you learned something, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about our update on Golden Ocean Group with me, and have a great day.